Hello, how are you doing? Welcome along to our weekly catch-up live stream here at FTUK. Hope you've had a good trading week in the markets, and I am super excited today because we are finally at the end of the summer and we move into that final quadrant of the year, that last portion, and this tends to be the best trading time. I've not had a particularly good summer myself, so if you've struggled as well along throughout these horrible summer months that we've been in, then do not worry. Things are going to get better from here on in. There's an awful lot to talk about in today's live stream. I wouldn't have said it was particularly educational, but we've got a little bit more decent content in today's live stream, which I think is going to cover prop trading from a few different angles, that kind of rich content that you're not going to find anywhere else online. So this is what we've got coming up today on the live stream. We are going to be talking about trading in this end bit of the summer, and then we've got coming up over the next few months, because it is going to change. And if you're new to markets, you'll feel that the trades feel differently, and it's hard to put into words, but we're going to try and put some context around it today. Also, I want to discuss, if for people that are new, because we try and cater for people that have never done any trading before, and also people that are experienced and they know what they're doing. But if you're new to the industry as well, understanding the difference between a retail brokerage in its normal state and then also a prop firm can be a little bit confusing. What are those key differences, and what do you need to know, and how do you make the best decision for yourself? There's a few key things in there that are important to point out, so we're going to discuss that. And then finally, I'm going to look at running multiple trading accounts, which is something that is becoming increasingly popular over the course of the last few years, probably because of the way that the technology works or something like that. Don't forget as well, if you are not a member of our Discord community, then that is the code there. That one there, scan that QR code there and get access to our Discord community, which has got thousands and thousands of people in there. Lots of like-minded people, very similar to yourself, all doing what they need to do in the prop industry. And from an FTUK point of view, it's a good community, and usually all of the best offers that we've got, the new information, if there's problems or there's issues that have been fixed or there's stuff that we need to announce or talk about, that's usually the first place that things get discussed. So yeah, make sure that you join the Discord community. And we can't obviously go into the weekend without discussing a weekend offer. They are very, very popular. People like getting discounts over the weekend. I got no idea why. Maybe very active for crypto traders, I don't know, but all the other markets are closed, so take a break from the markets. But yeah, if you are looking to get involved in the markets this weekend, then or you're looking to get a new account, then Live35, that is the discount code that you want. That's 35% off all of our trading accounts, our new trading accounts that we've got at FTUK, and you just pop that into the coupon code and it will just take 35% off all of the costs, which is a fantastic way to kick the weekend off on a good note. Okay, right. Let's jump in. We are going to discuss, first of all, trading into the end of the summer. I am genuinely excited. It is by far and away my favorite time of the year, as the nights start to draw in a little bit and it becomes quite autumnal out there as well. And particularly if you're in some good trades, it can be a really good time of the year to trade. And there's no question that the texture of markets does change from month to month and quarter to quarter. So historically there is a sort of like a seasonal tendency to the way that markets do tend to trade. And if you've been doing it for several years, you'll start to pick up on the rhythm. Everything is seasonal in markets because we're all human, and humans have a cycle to them throughout the course of the year, because where Easter is and Christmas is, and people want to go on holiday and people go back to school and education and stuff. We have that life cycle in the year, and markets tend to pick up on that. So you'll see a lot of key differences. And it's also important, particularly in the finance industry, to understand that markets work on quarters. Money is put to work at the beginning of the quarter, and then big institutions, banks, investment funds and hedge funds and stuff, they look to make a return on that money over the course of a quarter. So there is a sort of like a life cycle within the course of the year that pushes the markets into a sort of like a seasonal loop as well, and that is a component of it as well. And there's no question in my mind, and I'm sure that a lot of people would agree with this, that the summer is the worst. Out of all of the bits of the year that you can be involved in trading, then the summertime is not good. It's not necessarily that markets don't move, it's the way way that the participants participate in the price action. The volatility can be very ragged. It doesn't necessarily mean that it's very volatile or not very volatile, but it can be difficult to work with. So your trends, they don't tend to work as cleanly as you may potentially hope that they did do, or your support and resistance doesn't tend to work in the same way as well. And that is a component of the summer. Summer is the worst time for that. That has all come to an end this weekend. It's all starting to change from here on in. And it's very, very good to see. I am not a fan of summer trading, so that's why I keep saying I'm super excited for what's about to come over the course of the next few months. This is the way that it looks. Now, it's obviously finance works in quarters, but it doesn't necessarily mean to say that it's just specific quarters that are best. There is an overlap in there. And what I've done here, you can see on this chart here, we've got each quarter obviously made up of 3 months. January, February, March makes up Q1. April, May, June makes up Q2, etc. As we go throughout the year. But it's not a question of saying, oh, well, it's just Q1 and Q4 that are the ones to trade. There's a bit of an overlap, and you've got to get in tune with that. And it's a combination of the quarter plus the holiday periods that you get in the middle. And there's no question in my mind that this bit in January, once people have finished Christmas and New Year and they've gone back to work, 1st, 2nd, 3rd of January, whatever it is, they all sit down at the desks and the meetings are had in these big banks and these institutions, and people say, right guys, how are we going to make money this year, and how are we going to make money between now and Easter? So that active period from January up to maybe that 2nd week of April, 3rd week of April, wherever Easter falls, that is a very, very important period in markets. That sets the tone for the course of the year. Now, from there on in, that tone is then delivered later on once we get into the final quadrant. And it's this bit in from May up to sort of the end of August that tends to be the worst period. Now, there's an old stock market phrase that you will come across in your journey as you become a trader, and that is the old stock market adage, sell in May and go away. That is very, very true in markets. You don't want to. Well, I mean, statistically, you'll find that people will say, yeah, but actually, that from a stock market point of view, sometimes that does work and sometimes it doesn't work. But there's no question that things start to change in May. There was an old concept when I first started to trade, where people would say, oh, well, over the summer, no one's at their desks; they're all on their yachts in Saint-Tropez or something like that. They're somewhere else. They're not working. I don't really think there's much in that, because most people that work on the institutional side of the markets, on the buy side or the sell side, then they tend to get given holiday allocation. It's not a question of saying, right, that's it, we're done for the next 3 months, let's go to the Bahamas. I think that is a little bit of a myth, but there's no question that everything changes in the price action. So there is something, a component that is different. And then once you get the summer done and dusted, and we finish with July and we finish with August, you get the change from the end of August into September, and it's this bit here, this leap from sort of the end of Q3 into the sort of the meat of Q4, which for me is the best period of time to trade every single year. So that is what we are now moving into, and it's got quite a specific turning point. It's not a gradual change. It really all changes this weekend, because we've got US Labor Day. I think US Labor Day is today. So this weekend period now marks, from a trading point of view, the end of the summer and a transition into the good stuff, into the period which everyone who is trading should be active now, from now up to the sort of that 2nd, 3rd week of December, before we go into Christmas. This is it. This is the time. If you've really struggled over the course of the year, now is the time to start to get down and get serious about your trading, because all of the texture, all the price action is going to line up with what we would expect to be good quality price moves. That doesn't mean to say it's going to be very volatile or not volatile at all. It's just the integrity in the price action. You will feel a difference between what we've experienced over the summer and what we are about to now start experiencing over the next couple of months, the next 3 or 4 months. And that is definitely something that is a component of markets, which I've gotten used to over the years. And if you've been doing it for a few years, you'll know exactly what I mean. So what actually changes over the summer, at the end of the summer into September? Well, You could argue that it's the fact that there's more institutions. They are now more active. They are looking to, bookmark their end of 2024 and say, this is how well we did. This is how we're making money between now and the end of the year. Maybe there's a mad scramble, but the point is there's more activity. That people would say that means there's more liquidity. But, we always act in liquid markets. We don't really trade illiquid markets at all. But there is certainly more activity, more volume being put through the markets. Certainly the stock markets and the currency markets for sure. So that is a component of what is going to change. As a result, you'll find that the markets will feel thicker. And what I mean by that is that you'll see there's more integrity in the trends. So you'll have a trend that starts to develop, but it doesn't necessarily mean to say that it loosens up before it then makes a new high. You'll find that the support and resistance, it tends to be relatively shallow, or it should be anyway. It should be more contained. And that is a quality of the market being a bit more thicker, as in, when the market starts to trend up and then when it starts to pull back, you should see buyers turn up if we are going to trend higher. That should be something that you should see. That should not change. But that doesn't necessarily mean to say that markets will be less volatile. Now, bear in mind that we've got this is election year in the US, and we've got a US election coming up. The relationship between Donald Trump and Jerome Powell is obviously a component of that as well, depending on what's going to happen. So it doesn't mean to say, and obviously that I've been watching online, so many people are calling a top in the stock market. Yep, okay, maybe it could be, but as I've demonstrated several times before, it's very easy to fall into a trap of constantly trying to pick the stock market. So that's definitely something you want to be careful of. But it definitely the volatility can pick up into an election as well. And so it doesn't mean to say that because there's more participants there that we can't get wild moves. Yes, we can, but you'll get used to you'll find more integrity in these support and resistance. That's basically what I'm trying to get at. There's more intent as a quality of that. The trends, they will be more established once they start to be built. Why? Because as you move into the end of the year, the money's going to go in from an institutional point of view over the next 2-3 weeks. And once it's in that direction, they're not going to want to be messing around with markets that are too choppy. They want to make some distance. So you should find that there's more integrity in those trends as they get established, and therefore they should stick, and you can hang your hat on those trends for sure. And also as well, what that does, because it's an election year in the US, and we've obviously gone on this interest rate hiking cycle, which is now going to start to slowly unravel, and inflation is contained, at least for now anyway, you'll find that the macros, the fundamentals, they connect much more with the price action, and that is the bit that I really love. Everybody who is a prop trader should be into the fundamentals as well. You can't avoid it. You can try, but eventually you will if you do want any staying power in markets, you'll have to get used to working with fundamental analysis. So start that today, this weekend, because the fundamentals that you'll start of see mapped out over the price action over the course of the rest of the year, they will connect very well with the price action, and getting used to that is important as well. So the global politics and you should be reading the Financial Times, the Wall Street Journal, get a copy of The Economist, start that kind of deep work and make that a commitment for yourself as a trader between now and Christmas, and you'll start 2025 on a much stronger note. So all of those are very key, important factors you should consider. It is a great time of year. I am very, very, very much looking forward to seeing how things change in the price action from here, and hopefully make a good return on the year as well. Okay, right, let's move on. Let's talk about, in fact, let me just have a quick drink of water. Let us talk about prop companies, prop firms, and also retail trading brokerages. People that are new to markets have so much choice these days, and it's a lot harder now, I think, than it was when I started, because when I started trading, online trading was relatively new. It kind of wasn't really fully figured out. You didn't have that much choice in platforms. There was maybe a handful, but now there's loads of different ones. You didn't have many choices in terms of where to get your data and your information or your brokerages. There was a hit list of a top 10, and that was about it. Now you're just inundated with choice, and your decision on how you should run your trading, where you run your trading, how you run your trading, with what vehicle you run your trading, you've got tons of choice. The prop industry has boomed. I mean, we are a prop company, so the prop industry itself has boomed to be a big rival to the traditional retail brokerage as well. So when you're new and you're just getting into it, you may not really understand the difference of what are those key differences and why they are there. And that is what I want to discuss today. So as a retail trader now, cutting through the noise is very, very difficult to do. And it can take a while, and it will no doubt cost you some money along the way as you slowly start to figure this out. So understanding the difference between a retail brokerage in its traditional sense and a prop firm is very important. You've got access to different brokerages with different deals, different prop firms with different deals. You've got lots of different online investing vehicles as well. In the UK, we have ISAs. A lot of people are very active in their ISAs and wanting to buy the actual shares in the stock market as well. ETFs are very popular investment vehicles as well these days as well. I mean, they have been for a while, but that's another route that people take on in their trading. The technology makes all of this possible, and that just keeps increasing, whether it's on your phone or whether it's on a tablet or a laptop or whatever it is. And the data you get as a retail trader, so much for free these days. You get access to information, data, free data feeds, news feeds, fundamental information, commentary, analysis. There's tons of it on there. So it is very, very noisy. So when we just break down the actual retail brokerages and the prop firms, they look very, very similar. They can feel very similar. And you'll see that from a lot of websites as well, they can actually look like very, very similar as well. And it can be confusing to understand what the differences are. So what I've done in this table is I've pulled out what I believe to be the core, just the good stuff, the core important stuff. You'll find lots of differences, obviously, but the really core important points that make a retail brokerage what it is, and then what a prop firm, a prop trading firm, what it is as well. You see that on the table, we've got on the left-hand side, we've got the retail brokerage side, and on the right-hand side, you've got the prop trading firm as well. Now, some stuff is very, very similar. In fact, it's virtually identical, and that can make differentiating between the two a little bit of a challenge. But certainly from a platform point of view, the way that you access this as a way of getting access to the market, you'll see that they're very, very similar. They'll do the KYC will be very, very similar. Your routine, your customer routine as well from an online portal will be very similar as well. The technology is going to be the same. You're going to find retail brokerages are going to offer you, MetaTrader and TradingView and Trade Locker or DX Trade, Match Trade, any of the big guns now that are in the retail trading space. That's going to be the same in a retail brokerage as it's going to be in a prop firm largely. I mean, we don't offer MetaTrader at the moment, but you'll see that there's a lot of similarity, and the way that you download it all, everything is the same. The technology, the indicators, the algos that you plug in, everything is no difference. Also as well, from a product point of view, you'll see that largely pretty much the products are exactly the same, mirrored from a retail brokerage to a prop firm. You're more than likely going to be trading CFDs these days. That's contracts for difference, and we're going to do a workshop on CFDs, what they are. But because the technology is similar, that informs the products that you can trade. And I don't necessarily mean trading gold or trading euro, dollar or something like that. The actual route to how you get access to the market, you need to trade a contract. And in retail brokerages and prop firms, we use contracts for difference. That is how it all works. So you see those are exactly the same. Also as well, the scale at which you trade as well will be similar as well, and that is what we call trading on margin, your application of leverage. So basically you're borrowing money. So everybody knows how a mortgage works. You buy an apartment or a house, you put a deposit in, and you borrow the rest from a bank. That's trading on margin. You are trading with borrowed money. You invest a bit, and then the brokerage or the prop firm or whatever, they stick the rest of those funds attached to that. And so you're swinging. You get a lot of firepower at your disposal. You'll find that there is no difference really between a retail brokerage and a prop firm in that sense. Possibly for choice, the amount of leverage you get access to, that will differ. You'll probably find that in prop trading circles, the leverage that you get access to is probably slightly lower. And as you go into the retail brokerage side, the access to leverage will potentially increase depending on your jurisdiction and depending on the broker that you decide to work with. So that is definitely a component to consider. But you'll find that largely they're broadly the same. Education, some brokerages will offer education, some prop firms will offer education. It's questionable as to what the quality of that education is going to be, but that's a maybe. That's not something that's always going to be uniform across those two different types of companies. You'll find that some retail companies will offer you webinars and forums and educational video courses and stuff like that, and then some prop firms will do that as well. But you see, this is what I said before, right at the beginning of this section. There's so much choice these days. You can get a lot of this stuff for free online these days anyway, so there isn't really much of a need to pay for trading education. Now, this stuff in blue underneath, this is where it all starts to differentiate. This is where we start to see the differences between the retail brokerage and the prop firm model. And one of the biggest ones is obviously funding. Now, in terms of a retail brokerage, do you work with funding? Well, yeah, you do, but it's yours. You have to invest your money into the retail brokerage account, and however much money you are able to invest really largely determines how successful you're going to be and at what scale you are able to trade. And of course, traditionally the retail brokerages have made a lot of money because people, with the application of leverage, people just go in too hard too fast and they blow up accounts relatively quickly, and therefore there's a reason why retail brokerages sponsor Premiership football clubs and Formula One teams. Yeah, I'll leave that one there, but you get what I mean. So the funding always comes from the retail trader. The retail brokerage do not put funds into your trading account for you to work with. That is different when we look at a prop firm. The prop firm will give you that funding so that you can get access to the market, so you don't actually have to do that, but the difference is that whilst you will be given funding, and you'll be given the funding that allows you to work at the level that you want to work at, you have to prove yourself and you have to stick to the rules. So not only do you have to sort of like understand how your trading strategy works, but you're going to be given trading rules that you've got to work with as well. And that is a huge difference. The retail brokerage, they don't care. You don't have to put a stop loss on with the retail brokerage. They keep it simple. They're hoping that you're going to blow up, and they don't care. So you can do what you like. You can pretty much trade as you like. I mean, some retail brokerages will have limitations on how you can scalp the market, particularly from an algorithmic point of view. They may not like that, and that will depend from brokerage to brokerage. But certainly when you come to work with a prop firm, there will be specific rules, parameters, risk parameters that you have to work with, targets you have to hit, durations you have to work with, maybe some limitations on asset classes. And that limitation is what you are having to pay for, is what you're having to take on board as a consequence for the prop firm putting the capital there, putting the funding up behind to allow you to get access to the market. So that is really one of the core differences between the two. The account sizes as well, they will differ. You'll find some retail brokerages will allow you to deposit amounts as small as $50 to work with in a trading account, which is pretty much no money whatsoever. And they will allow you to trade that, and then they will allow you different levels of customer service depending on how much you invest in your trading account. So people that put a lot of money in and put a lot of volume through the brokerage, they tend to get treated a little bit better than everybody else. That's the way it works in a prop trading, in a retail brokerage. When it comes to thinking about a prop firm, it works differently because most people are wanting to work at a higher level right from the get-go. So the accounts, they don't tend to be very small. They always tend to be starting at a really meaty value. 10K is very common, depending on whether what evaluation you're doing or whether you're doing an instant funding trading account, but they tend to be higher value accounts right from the start. And so that is a key difference as well. And then the final one to just note is risk. What about the risk? The risk is all on the client in a retail brokerage. The retail brokerage do not take on any risk. And if you, depending on what sort of business model you have, whether you got an ECN or an STP or a no dealing desk model, will dictate how much risk the brokerage needs to be aware of, because if you're through to an ECN, it's hands off. They are not interested in the risk at all. Which is where you, from a retail brokerage point of view, you can do what you like. So therefore, the risk is all on the client. That's very different when you look at a prop trading firm. The risk is not on the client at all. The risk is on the actual prop firm, because you are paying a fee to get access, a small fee to get access to the funded account, and therefore you have to step through the rules, and the prop firm will be taking on that market risk for you. So that is a good look at all of the different types of differences and similarities between a retail brokerage account and also a prop trading account. So obviously, we are not a brokerage, we are a prop firm. So why do we believe that the prop trading route, depending on how you want to do things, is the best route? Well, number one is the biggest one, is access to capital. It's pretty well known these days by most people that are relatively savvy in investing online that you can't turn small money into big money very easily. People try, and the use of leverage opens the door to that possibility, but it is immensely hard, and you can pretty much go broke trying to do that. So while some brokerages will allow you to open an account with $50, the chances of you turning that into 10K or 100K are just, you might as well be buying lottery tickets. It is very, very difficult to do. So one of the things that prop trading allows for is it allows you to access the kind of capital which allows you to have a more meaningful return on your skills and abilities and your investment. And that is the game changer, because not everybody has 10K to put into an account. Not everybody has 100K. And the old phrase is very, very true. The easiest way to make a small fortune in markets is to start with a big one. I cannot tell you how true that is. The more access to funds you have, the easier your journey is, because most people look at trading and say, well, if I could just replace my salary, if I make $2,000 a month or $3,000 a month, whatever your salary is, if I could just make that in the market, I would be happy. Yeah, but if you want to make an average return over the course of the year where you can equate a $2,000 or $3,000 monthly salary to that return, you need a really big account to work with, and you need to know what you're doing as well. So this is what the prop trading industry has solved for a lot of people, and that in itself is a game changer, and which is one of the reasons why we believe it's a really good way of getting involved in markets. The second aspect is risk. Most people don't have access to a lot of money, and maybe they've got an ISA account or a savings account, something like that. Maybe there's a few grand in there, 10 grand, 20 grand. You take that money and you stick it in a brokerage account, and you lose it over the course of 6 months. That old phrase, 90% of traders lose 90% of their funds in 90 days. Who wants to do that with their life savings? So what prop trading does allow is it does allow you to access the markets in a way where you are not taking that risk, because you just pay a flat fee, and if all goes wrong, then at least you didn't lose the house, and that is the important point in that, which is why I think prop trading is so popular these days as well. Also, a sense of community. Accountability in trading is massive, particularly if you're in year 1 or year 2. Most people will go through a phase where they're gambling a little bit. You can't help it. Everyone will do it, and you'll learn as a result of that. Everybody does. The market teaches you, and you'll pay for your education one way or the other. But a sense of accountability can help a lot of traders. So that's where prop trading rules and having a support system around you can really help you a lot. And there's no question that if you are working with a prop firm, you will have rules that you have to adhere to. And that can be so where people think I can be a burden. No, actually, it can help you, because it can keep you risk focused all the time, and that is that's an imperative to trading success in the long run. No question about that. Also, as well, from a cost point of view, it is a cheaper route into markets. You cannot be successful in trading without access. You need access. You need the technology and the information and the tools and the liquidity and all that stuff. You need it, and the market's in front of you. So getting a cheaper access point to the market is in everyone's interest, and that is another good reason for going down the prop trading route. There we go. Prop trading, it is something that is here to stay. It's growing in popularity, and it is good to see. We welcome the rules and the regulations. That is cleaning it all up. That's wonderful. But it's definitely got a place in the retail finance space for sure. Okay, let's look at the last aspect, and the last thing I want to talk about today, and that is running multiple trading accounts. And this is also a knock-on, really, from where the prop trading industry has liberated a lot of people as well. Pretty much gone are the days of trading all your money in one account. And the reason why most people would just have a single brokerage account is because they've got limited funds. So they just tend to stick it all in one place, and that's it. You don't need to do that these days, because the prop trading business has really split it all off, and so you can have lots and lots of different accounts doing different things. Most retail traders going on their learning curve, their journey, will try several techniques, at least 3 or 4. They'll have finding yourself as a trader is very, very difficult to do, and it took me about sort of like 10 to 12 years to figure out who I was best as a trader, what kind of a trader I wanted to be. So that involves experimentation, and that experimentation means that you'll be looking at multiple different types of strategies. And another component of that is then being very, very organized in the way that you go about that, because once you start to manage your account with multiple strategies, you'll find that balancing the risk is a lot more difficult to do, particularly if you're running a prop trading account which has got a very, very closed sort of like set of rules that you have to stick to if you want to be successful. So being able to segment your trades as well is a very useful thing to be able to do, and multiple accounts allow you to do that. So the first one, obviously, people don't put money in brokerage accounts anymore, as in they just stick it all in one place and then just sort of trade it in one account. I mean, certainly when I started, that's what most people did, and you were limited, and it was the lack of funds that limited you to that. But you don't need to do that now. With prop trading, you can have as many accounts as you like, obviously in different prop companies. With FTUK, you can have up to 3 accounts, and that is a very liberating thing to have at your disposal, because they're not expensive to get, and you can keep trying, and you can have different things running at the same time. And at FTUK, you can have up to 3 running at the same time. And the pricing of the technology really has allowed that to happen. And, if you think about from a point of view of strategies and techniques, like I said, most people will be mixing up and be experimenting with different types of trading. So you might be a scalper, you might be a swing trader, you may want to experiment with some position trading. That gets really complicated once you've got one single account and you're trying to scalp the euro dollar whilst holding a long-term gold position, because if there's volatility and stuff, it can get really messy very, very quickly. Having multiple accounts, that is a really good way of segmenting that for sure. Also as well, what people tend to do as well is they tend to do a lot of algo trading these days. So you may want to be a discretionary manual trader. That's where I come from. I'm a discretionary trader. I want to be the guy making the decision, pulling the trigger. Not everybody does. Trading with algos and copy trading is very, very popular these days. Again, the technology allows that. That's something that if you're doing that, you don't really want your manual trades, your discretionary trades running on the same accounts as your algo trading as well. That is not usually a good way of doing it, because you could potentially be screwing up the algorithmic trading from a position sizing point of view. If you've got a robot that is successful over the long term, but it needs a certain amount of position sizing as a component of that algorithm, then your discretionary trading could be screwing that up if you're in danger of being drawn down too much in your discretionary trading. So having separate accounts in that sense makes that very, very possible. And also copy trading as well. It makes things a lot easier. And the final one, of course, is just generally being more organized. And from a prop trading point of view, everything is about risk management. So if you are mixing asset classes where you've got currency markets that are not quite as volatile as the commodity markets at the moment, or the stock or the indices or something like that, that can really impact your risk profile, and then it can have an impact on your leverage and your margin. And in a prop sense, that you're quite limited. You're always going to be working within risk parameters. Excuse me. So having that split apart across different accounts can be a very strong factor, and can be a bonus as well. So as you can see, there's quite a few things in there now. We at FTUK, we offer up to 3 multiple accounts at the same time for anyone who wants to trade with us, and that is a popular way of doing it. So much so that we're going to be doing some offers over the course of the next couple of months that look at people that are into having multiple accounts at the same time. So definitely keep an eye on your email accounts, because those new offers for multiple accounts will be hitting the emails over the course of the next few weeks, and it's something that will allow you to organize your trading a bit more, and for all of the reasons that we've talked about, and there'll be some great offers around that. So it's a good thing. It's definitely a good thing as well. Gosh, we covered a lot today. That was an awful lot of information. Yeah, I really enjoyed that. I am super looking forward to how things are going to map out over the course of the next few weeks, that's for sure. Don't forget our weekend offer as well, Live 35. That is what you want if you want to get an account. Stick that into the coupon code on the checkout, and you can get access to a 30% discount off everything, off all the accounts as well. So they are very popular to do as well. Brilliant, good stuff. Really looking forward to how things are going to map out over the course of the next few weeks. Definitely pay attention. Now is the time to be involved in markets. Have a great weekend, and we will see you all soon.